you were talking about how much insurance that a family needs. So based on that, there's term insurance and there's whole life insurance. I want you to explain the difference.
Okay. First of all, the difference between the two are very, very unique. Term insurance is exactly what it means, for a specified period of time. It's term insurance. It's raw. It's pure. You're paying for pure protection. On a whole life product, it's for your entire life. And you're paying for several things. You're paying for cash accumulation, emergency cash, and a death benefit all at the same time. So the cost is going to be a little bit different. It's going to be a little higher because you have other features in the plan, unlike term. Once the term is over, you have no more coverage, or you can go to what's called an annual renewable term policy, which becomes more expensive as the years go on. So statistics show that most of the death benefits aren't usually term insurance because people can't afford to keep them up. But if they buy the insurance, which is a whole life product or a permanent plan, if you will, they usually will lock in on a price when the price is good, and it will carry out for their entire life. The cost will never change.
Right. And that's so important because a lot of people do opt for the term insurance. And then by the time the term runs out, they're in their late 60s, early 70s, and they may have at that point insurability issues where they can't get a whole life policy at that point. And if they were to get it, they're going to be so heavily rated that the cost of that insurance is going to be so expensive, they're not going to be able to get it.
Absolutely. And that's why you see a lot of the commercials on TV that are saying, there's a non-med, and it's usually final expense.
Right.
And usually the family suffers still because you had raised a question in reference to how much insurance is a family to have and how do we pay the insurance out. I usually recommend to a client to have a settlement option because you need that time to grieve. You need that time to get things back in order.
Right.
So typically, rather than having a $500,000 or $1 million policy and getting the check up front, they have found that most beneficiaries will be exhausted financially within a year.
Right.
But if that income stream is continued over time, basic standard of living still exists.
Right.
Because you've replaced the income that's lost that was coming into the household.